Good morning to our lecturer, Dr. Adila. Today we are going to present our analysis report of our group assignment. I am Chandrabanu, Dr. Frajamani, metric number 275482. First, for introduction, our group project recreating portfolio consists of 5 stocks from 5 different sectors result in Bursa Malaysia, which are Bonia Corporation Berhad, Comfort Gloves Berhad, AirAsia Berhad, Petronas Chemical Berhad, and Fraser and Neef Holding Berhad.
Good day, Doctor. My name is Wei Hui Sun and matrix number is 27013. Here we will talk about the monetary and fiscal policy. First, monetary policy. Central Bank of Malaysia, namely Bank Negara Malaysia, decided the OPR at 1.75% in the fourth quarter of 2021 because they believe that, supported by improvement in manufacturing and service activity, the global economic recovery was further strengthened. While for fiscal policy, adjusting government expenditure is the most effective and faster way to promote national economic growth during an economic recession, significantly in the developing country and economic power. While the second fiscal policy through is the government use of tax policy to boost the overall economy.
Hi, my name is Lawan Jo, metric number 270572.
Let's continue with the unemployment rate. As we can see from the figure, Malaysia's unemployment rate fluctuated over the 6 years from 2015 to 2020. The unemployment rate started to increase from 2018 to 2020 due to the outbreak of the COVID-19 pandemic in 2019. Severe containment measures were taken, resulting in job losses. It directly affected the unemployment rate to rise to 4.5% from 3.3% in 2019. While in October 2021, the unemployment rate was 4 to 4.3%, the lowest rate since January 2020. This was due to the continuous resumption of more economic, social, and recreational activities.
Next, we continue with the Malaysia inflation rate. So, Malaysia inflation rate fluctuates over the 5 years. The 2017 was recorded as the highest among 5 years, mainly due to rises in fuel price and food and non-alcohol drinks. And the year 2020 was recorded as the lowest among 5 years, mainly due to the COVID-19 pandemic, as adversely affected the operation of transport.
My name is Kam Ilin, metric number 271346. Now we are going to talk about the gross domestic product, GDP. From the data shown, we can see that GDP is in a negative trend for 2020 as the outbreak of COVID-19 pandemic. Luckily, it rose back in 2021 and predicted to increase in 2022. There are several reasons to expect the GDP increase in 2022, which are reopening of economic activities, furtherance in the labor market, continued policy support, and enlargement in global demand. The employment condition is also expected to increase.
Now I'm going to explain about Bonia Corporation Berhad. Bonia Corporation Berhad is a Malaysian investment holding and management company. We use SWOT for industry analysis. Strength: Bonia is a well-recognized and well-known brand. For weaknesses, the company terrible sales pattern is a huge source of concerns. For opportunity, Bonia might be able to break into European market and produce services to customers all over the world. For trades, the service or item given by competing enterprises or international clients are referred to as global competition. Now let's look at industry analysis for fashion industry. The year 2020 passed and many Malaysians and businesses have adapted to the year's unusual circumstance. The luxury market recovery, which include watches and jewelry, fashion clothes and accessories, luxury travel, perfumes and cosmetics, is primarily reliant on advances in developing COVID-19 vaccine, which provide clients with a sense of security. Let's move to the fundamental analysis. We can see that there is a financial conditions, operating result and ratios. For ratios, we calculated for 5 ratios. The first ratio is liquidity ratio. Current ratio and quick ratio is used to evaluate Bonia's liquidity ratio. The result is doing good in terms of short-term asset and liability. Next one is leverage ratio. The value for both debt ratio and debt equity ratio is increased in these 3 years. Overall, the debt financial of Bonia result is low risk and low debt level. The third ratio is equity ratio. The value for total asset turnover for 3 years is decreasing, and it shows that company is having difficulty in managing its asset in order to generate the sales. Account receivable turnover is good in Bonia's for 3 years because it is greater than 1. For profitability ratio, we use net profit margin and return on asset. It shows upward trend in these 3 years, which means the manager of the company can make good decision and able to make profit from the sale. The last one is common stock ratio. EPS for this company shows inconsistent for past 3 years, but the value is increased in 2021. For intrinsic value, the current share price is 0.9650 for 31 December 2021, and the intrinsic value for Bonia is 1 ringgit 52 cents. This shows undervalued. To get profit, we have to buy today at lower price and hold it until the share price reaches the intrinsic value. Next, technical analysis. This is a daily chart of Bonia Corporation Berhad. For the moving average, the blue line is intersect the red line from below to above. It showed that upward trend. For relative strength index on 22 November 2021, the price sits at 46.15%. On last day trade, which is on 20 December, it sits on 70.8%. However, from 7 November to 14 November and 20 November, the RSI is over 70, meaning that it is overbought. For moving average, at beginning, we experienced a downward trend, and after 2 December, the trend reached maximum point, and on last day trading, our price was at 1 ringgit 1 cent. Lowest point is at 85 cents. Lastly, green line represents support line at 84 cents and red line represents resistance line at 1 ringgit. This means investor can purchase for 84 cents and sells at 1 ringgit. Finally, for trading stock about Bonia Corporation Berhad, on 29 November, we buy at 82 cents and sell on 1st December for 85 cents. And then on 2nd December, we buy at 85 cents and sell at 1 ringgit on 9 December. Lastly, on 15 December, we buy at 98 cents and sell for 1 ringgit 1 cent on 20 December. Total profit we made from Bonia Corporation Berhad is 1,440.
The second stock to invest in is Comfort Gulf Berhad stock. Comfort Gulf Berhad is a Malaysian investment holding firm. Based on the stock analysis, the strength of Comfort Gulf Berhad is producing high-quality latex gloves made of natural materials. And this company was adopted total quality management as its functional approach that is focused on the needs of the customer. But the weakness of this company is does not have an appropriate training and growth policy for its human resources. This will result in exposures to high safety incident risks and complex problems. The opportunity to Comfort Gulf Berhad is to seek for experienced employees to create innovative innovations. Threat faced by Comfort Gulf is the expensive cost in raw material due to the shortage of synthetic latex. Next, the competition positions of the rubber glove industry. The turnover of 7 gloves stocks listed in the graph has reached total 57.66 billion, accounting for approximately 19% of the 300.4 billion turnovers in Bursa. Although the glove manufacturing industry has been facing fiercely competitive business challenges, but the appeal of digital transformations will benefit the glove industry. Some investment analysts believe that the glove industry will provide healthy margins in the future, even if the pandemic subsides. From the fundamental analysis perspective, we can see that the financial conditions and operating returns on Comfort Gulf Berhad are performing well overall. The liquidity ratios dropped significantly from 2018 to 2019 and slightly increased to 2020. Overall, Comfort Gulf Berhad has a current ratios of more than 1, which means that company was in a good liquidity position. The leverage ratios and activity ratios are both shows an unstable trend over the 3 years. Moreover, the profitability ratios was dropped from 2018 to 2020. The continued dropping of Comfort Gulf Berhad's return on assets indicate that the company is unable to maximize the value of its assets in order to increase profits. While the common stock ratios shows an uptrend on the price-earning ratios, it illustrates that investors are more confident in 2020 compared to the previous year. We make a stock valuation, and currently the stock price is overvalued at the intrinsic value recorded 1.92 ringgit Malaysia, so this stock is not preferred to buy. Technical analysis for Comfort Gulf Berhad. During the trading days, based on the moving average convergence divergence MACD, we can see that the company is in bullish conditions when the blue line crossed over the red line. Meanwhile, the relative strength index indicates that the stock price is moving within 30 to 70 over the 20 days of trading. For the moving average, during the 20 days tradings, there is no cross between moving average 50 and moving average 200, which shows that there is no opportunity to buy or sell. For the support and resistance, the support line was at 0.95, while the resistance line was at 1.36 over the 20 days of trading. traders can buy the stock when the price falls towards support and sells when the price rises toward resistance. Here is a portfolio trading on Comfort Glove Berhad. We start to invest on 22 November with 7,200 units by 1.06. Then we add on 6,500 units on 26 November by 1.07. We sold both of them on 30 November for 1.36. Besides, we buy 5,700 units on 14 December for 0.95 and we sold them on 16 December for 0.99. At the end of 20 days of trading, we have earned a total profit of 4,273 ringgit Malaysians in Comfort Glove Berhad stock.
The third company we choose to invest in is AirAsia Berhad. AirAsia is a low-cost carrier terminal LCCT company based at Kuala Lumpur International Airport. From this SWOT analysis, we can see that the advantages and opportunity for this company lie in their low-cost airline and their service innovation. At the same time, the weakness mainly lie in the complaint about its service and the lack of maintenance, repair, and operation MRO facility, while the trade is to charge fees beyond the control of airlines with more competitors. Based on the industry analysis, we can see that the airline industry is undergoing a downtrend due to pandemic COVID-19. However, it is expected the total international passenger traffic will not reach the level of 2019 until 2024, 1 year later than the previous forecast. For the fundamental analysis, we can see that the financial condition and operating result of AirAsia Berhad are performing fairly overall. The liquidity ratio, leverage ratio, and activity ratio show a downward trend, which indicate that AirAsia Berhad had difficulty in paying off debt and failed to effectively use assets to generate revenue. We assume that the company has too many liabilities, and sales of the company are dropping during pandemic COVID-19. Due to the decline of the net income and stock price, the profitability and common stock ratio dropped significantly. It showed that AirAsia Berhad has a low ability to generate profit relative to its sales or asset. On 31st December 2021, the share price is overvalued at 79 cent ringgit Malaysia, while the intrinsic value is recorded at 71 cent ringgit Malaysia. For technical analysis of AirAsia, during the trading day, based on the MACD, we can see that the company is in bullish condition. Meanwhile, the RSI indicates the stock's price is close below 30 during trading days, which happened the oversold and undervalued situation. From the chart above, which conclude that the moving average 50 days closes above the moving average 200 days. It will indicate the trend of AirAsia Berhad stock is shifting up and it now ends the golden growth. For the support and resistance, we set the 75 cent as the support line and 80 cent as a resistance line. It shows that the trader can buy AirAsia fall towards support 75 cent and sell AirAsia rises toward resistance 80 cents. Here is the portfolio trading about AirAsia Berhad. We buy at 80 cents, 76 cents, 77 cents. Then we sell the stock at 80 cents and 83 cents. The total we make profit from AirAsia Berhad is 820 ringgit. Thank you.
The fourth company that we analyze is Petronas Chemical Group Berhad. Continue with the chemicals industry analysis. Petronas Chemical is a Malaysia's leading chemical producer. The strength is high performance innovation, clear and focused strategy, and high standard of corporate governance. The weakness is lack of advertising and marketing strategy and exposed to high safety incident risk. And the opportunity of Petronas Chemical are the scarcity of crude oil and high opportunity expansion of company due to the joint operation. And the threats for Petronas Chemical are fluctuation of oil market prices, highly competitive market, and global challenge COVID-19 pandemic. Competitive position of chemical industry include that the new chemical producer competitors from China and India, and a new model of chemical industry must be sustainable and fulfill the environmental, social, and governance has increased the competitive position of chemicals industry. Next, come to fundamental analysis of Petronas Chemical. Based on the financial statement analysis, it shows a positive sign of assets, liabilities, and equity for Petronas as no sharply decrease or increase. Next, based on the operating result of Petronas, it shows a downtrend of revenue and earning per share. It's a negative side of revenue and earning per share for Petronas, as it is a trick for loss of investor. And next come to the liquidity ratio graph, shows that Petronas Chemical has the high ability to satisfy the obligation in the short term, but the current asset have not been utilized effectively because the liquidity ratio has higher than 2.5. The leverage ratio graph shows that Petronas Chemical minimizes the financing risk and is unlikely to generate more income in low long-term liabilities, as leverage ratio is out of range of 1 to 1.5. And the fluctuation of the activity ratio of Petronas Chemical shows that efficiently utilized asset to generate revenue and the payment collection is not stable. And the downtrend of profitability ratio graph shows the Petronas Chemical has low ability to generate profit relative to its sales and assets. And the uptrend of common stock ratio shows the investor have higher earning growth expectation towards Petronas Chemical than the downtrend of the earning per share. Next, the forecast year 2021 of intrinsic value of Petronas Chemical is 10 ringgit 19 cents by using the forecast of revenue, net profit, share outstanding, and earning per share. Next, come to the technical analysis of Petronas Chemical. So the MACD chart shows the Petronas Chemical is in a bullish condition as the MACD line is above the signal line. And in relative strength index, there's no overbought or oversold as the RSI does not cross above the 70 and or below the 30. So it shows there's no potential bullish entry and also a potential exit signal. And there's no cross between the MA50 and MA200, which shows that there's no opportunity to buy or sell. As the MA50 was above MA200, it shows that Petronas Chemical is an uptrend stock, and the support line was 8 ringgit 21 cents, while the resistance line is 8 ringgit 63 cents. It shows that the traders can buy Petronas Chemical stock when the price falls towards the 8 ringgit 21 cents, and can sell Petronas Chemical when the price rises towards 8 ringgit 63 cents. Here is the portfolio trading about Petronas Chemical. So we buy at 8 ringgit 30 cents, 8 ringgit 53 cents, and 8 ringgit 68 cents. Then we sell the stock at 8 ringgit 45 or 54 cents and 8 ringgit 75 cents. So the total we make profit for Petronas Chemical is 450 ringgit.
The last company we choose to invest in is Fraser and Neves Holding Berhad. FNHB is a well-known company in the beverage industry. From the SWOT analysis, we can see the strength and the opportunities of these companies are about the advantages in good brand name and high recognition. Meanwhile, the weakness is some of the products are unpopular due to imbalanced profile and inexistent advertising. The threats are about health issues and the outbreak of COVID-19. Based on the industry analysis, we can see the beverage industry is undergoing an uptrend due to the beverage industry is involved in different categories and the demand in the market is continuously increased. For the fundamental analysis, we can see the financial condition, operating results, and the ratios are performing well in overall. The liquidity ratio is undergoing an uptrend, but the leverage ratio is decreasing. However, this indicates that the debts are lesser. For the activity ratio, there is a drop in 2020 but increase in 2021. Profitability ratio and market ratio here shows a slight drop due to the decrease in net income and the share price. Here, we have made a stock valuation and the current stock price is undervalued as the intrinsic value we had recorded as 28 ringgit 41 cents. Here is the technical analysis for FNHB. During the trading days, based on the MACD, we can see the company is in bullish conditions. Meanwhile, the RSI indicates that the stock price is moving between 30 to 70, except for the 2 days in November, which happened the oversold on the 23rd and 29th. For the moving average, the line is higher than the stock price in November, and the scenario changed into a good sign in December. For the support and resistance, we set 24 ringgit and 22 cents as our support line and 27 ringgit 94 cents as our resistance line. At the beginning of the December, the stock price broke the support line but has found that. Here is the portfolio trading about FNHB. We buy at 23 ringgit 72 cents, 23 ringgit 40 cents, and 23 ringgit 54 cents. Then we sold at 25 ringgit 60 cents. The total we make profit from FNHB is 1,748 ringgit. In overall, the total profit we have made for our 20 days portfolio trading has reached to 8,739 ringgit. The highest profit was from Comfort Glove Bahat, and the lowest will be PCAM. That's all from us. Thank you.